Good day, everyone. In behalf of DIFC Academy, I would like to welcome you to today's session on UAE ESR by Tanuja Paramasivam and Lori Baker of DIFC Authority. You'll have the opportunity to submit text questions by typing them into the chat box. A PDF slide copy will be shared after the session, and a short survey will be sent after the webinar, so kindly share your feedback with us. In case you experience any technical issues, please check your internet connections and refresh your browsers. And now I'll hand you over to Tanuja and Lori.
Good morning, everyone. Thank you very much for attending this session on an update on UAE economic substance regulations. We'll be giving you an overview of key changes that have been made to the regulations, along with telling you what you need to do as a result of them. So once again, thank you very much for joining us. And in the interest of time, because we have a lot of things to get through, we will jump right in. As Maristella told you, you will be getting these presentations. There are a number of links on the presentation that you will be able to use to get further information. So don't worry about that. You will have all the information. Okay. This is the order that we're going to go through. We'll give you an introduction and a background on the economic substance regulations, tell you who is subject to the regulations and also who is not subject to the regulations. We'll give you a summary of key changes and the impact of those changes, and then walk you through exactly what you will need to do on the new MOF portal that will be coming out soon. Laurie will also tell you about the consequences of not filing on the MOF portal, and we will have a general Q&A session at the very end, but after each of our sections, we will also do a little mini Q&A as well. So once again, welcome everybody. Thank you for joining us, and we'll jump right in. As you all know, last year, it was actually in April last year, the UAE enacted economic substance regulations and issued guidance later on in the year around September on the application of the regulations. Now, since then, the UAE has been in consultation with the OECD and with the EU and has made amendments to the economic substance regulations, which were issued on the 10th of August 2020. As a result of the changes to the regulations, they have also issued updated guidance and an updated relevant activities guide, which you will find in Ministerial Decision 100 of 2020. As I've said before, the links are all there in the presentation. You'll be able to access them. We have also updated our webpage on economic substance, so you will find more information there. And in addition, the MOF website has also been updated with all this information, so you can go there to get more information as well. Now, the key takeaway is that all firms that conduct one or more relevant activities have to submit another economic substance notification on the MOF portal, okay? And they will also need to submit an economic substance report, if it's applicable to them, electronically on the MOF portal once it goes live. We are expecting the MOF portal to go live on the first week of December. Further communication will be sent by the DIFC Authority and the Registrar of Companies on when that specific date will be, and we will send you the links to the MOF portal as well so that you can access it. As soon as the portal's ready, we will let you know. But once it is ready, you have a deadline of 31 December for which notifications and returns need to be filed based on your reportable period. Now, this is only applicable if you conduct a relevant activity. And even if you've submitted a notification through the DIFC portal with the DIFC, you are still required to resubmit a notification if you conduct a relevant activity on the MOF portal as well. Now, this week, we will also be issuing communication to those entities that have filed notifications with us and have told us that they've conducted a relevant activity. Based on the reportable period that they've notified us, we will tell them that they need to file a further notification on the MOF portal, and we'll also tell them if they need to file a report on the MOF portal. But please note that those communications are based on the information that you have submitted to us in your notification in the middle of the year. If things have changed, you may want to reassess your obligations in light of this presentation and the amended regulations and guidance. If you now think that you conduct a relevant activity, even though you previously told us you didn't, make sure you file. And similarly, if you previously told us that you did conduct a relevant activity, but after thinking about it over the last few months and in light of the new regulations and guidance, you have decided you no longer conduct a relevant activity, then you do not need to file anything on the MOF portal. Okay, now we'll keep going and tell you a little bit more about the regulations and the updated regulations. So the relevant activities have not changed. We still have all 9 of the relevant activities, which is banking business, insurance business, fund management business, financing or leasing business. So those are the regulated or financial activities. And then there are a number of non-financial activities, such as headquarters business, shipping business, holding company business, intellectual property, holding or exploitation, which also includes high-risk IP, and distribution and service center business. Those relevant activities stayed the same. There have been slight modifications to some of them, which we will explain later on in this presentation. Now, this next part has not changed either. So the economic substance regulations apply throughout the UAE, onshore, regardless of whether you're regulated or incorporated or registered with a DED, an economic department, with a free zone anywhere in the UAE, or in a financial free zone like the DIFC. If you conduct a relevant activity and you have a financial year commencing on or after 1 January 2019, then the economic substance regulations apply to you. Now, if you are an exempted licensee, you do not need to file a report. However, you still need to file a notification. We will go through the definition of exempted licensee. That has been updated in the new regulations. Now, in the DIFC, the economic substance regulations apply to all entities, regardless of your type. So whether you're a private company, a public company, any of our 3 types of partnerships, a foundation, an NPIO, or a branch. Note, there are some exemptions to branches, which we will go through, but technically, all of you are in scope if you conduct a relevant activity and you have a financial year that commences on or after 1 January 2019. And now you can find more information in the guidance on these relevant activities. Schedule 1 of the new guidance has an updated relevant activities guide, and we've mentioned this before in our previous outreach sessions. We can't tell you whether you conduct a relevant activity or not. You have to determine that for yourself. The guidance will help you. There are examples of different types of relevant activities and different types of businesses. So please refer to the guidance. And if you still can't determine whether you conduct a relevant activity or not, please get independent advice. Okay. So we talked about who is in scope. Let's look at who is out of scope. So under the new economic substance regulations, they have changed the exemption, the definition of exempted licensees. So under the new definition of exempted licensee, if you are an investment fund, the investment fund vehicle, you are now an exempted licensee. Okay. If you are a tax resident outside the UAE, then you are also an exempted licensee. What they mean by tax resident, though, is that you are subject to corporate tax outside the UAE. So if you just pay VAT or GST in another jurisdiction, you won't be subject to this exemption. You have to actually provide evidence that you are subject to corporate tax in a jurisdiction outside the UAE. Okay, now there is also an exemption that has been introduced for entities who are wholly owned by UAE residents and that are not part of a multinational group, meaning that they don't have entities established all over the world. They have to only be in the UAE. And if the entity only carries out business in the UAE, then you will also be considered an exempted entity. Now, as you will recall, the economic substance regulations apply in low tax or no tax jurisdictions, and they're aimed at stopping people from avoiding tax in other jurisdictions by establishing entities in the UAE. Now, this exemption applies where an entity is owned by UAE nationals or residents, and it only carries out activities in the UAE and is not part of a larger group that has offices all over the world. Okay, so if your operation is limited to the UAE and you only carry out your business in the UAE, then you will be exempt. Now, that doesn't stop you from having clients outside the UAE, but you shouldn't really be having offices and premises in other jurisdictions. Okay, another exemption has also been provided for branches of foreign entities that are subject to corporate tax outside the UAE. We have a slide just on branches, so we'll go into this in more detail. Now, wherever these exemptions apply, evidence must be submitted, particularly in relation to the second and the fourth exemption, where you have to prove that you're a tax resident outside the UAE. You will need to provide supporting documentation in your notification, such as a corporate tax certificate in another jurisdiction, or corporate tax assessment, or evidence of payment of corporate tax. So you will need to provide these justifications. Okay, another really important thing to note is that the previous exemption under the original economic substance regulations for entities that are owned 51% or more by a UAE government is no longer applicable. So those entities that were previously exempt because they were majority owned by the UAE government are no longer exempt. So if you conduct a relevant activity and you don't fall under one of these other exemptions, you are fully subject to economic substance regulations, and you will need to file both a notification and a report. The consequences of being an exempted licensee under the new definition is that they are still required to submit a notification if they conduct a relevant activity on the MOF portal, but they are not required to file an economic substance report or meet the economic substance test. We cannot stress how important it is for exempted licensees under the new definition to still file a notification, because if you don't, there are fines. And you still need to file a notification. You need to substantiate the basis on which you are an exempted licensee and file on that notification the supporting documentation so that we as a regulatory authority can assess whether you fall under one of those exemptions and verify that. However, you will not need to file a report or meet the economic substance test. Okay, now I'm going to go through some of the key changes as a result of the new economic substance regulations. Okay, so once again, a few months ago in August, new economic substance regulations were enacted, which repealed and replaced the previous economic substance regulations and guidance. Okay, there has been a change in scope of licensee and exempted licensee. Really, for DIFC entities, that change in definition of licensee has not affected you. All DIFC entities that conduct a relevant activity are in scope. Okay, the definition of exempted licensee has completely changed, so please look at the new definition to see whether you fall under it. Previously exempted entities that were majority owned by UAE government are no longer exempt. Okay, there has been a clarification regarding branches, which we will go through. There has been some amendments to the relevant activities for distribution and service center business and high-risk IP business. Slight modifications for holding company, but nothing in substance, so that largely is exactly the same as what it was before. So we're not going to go through that one, but we will talk you through the distribution and service center business and the high-risk IP business. We will be putting this presentation on our website as well, so you'll be able to access it, but you will get it after this session too. Now, the definition of relevant income has changed. I will go through the new definition, and the new regulations also clarified the roles and responsibilities of the key authorities. So it officially appointed the UAE UAE Federal Tax Authority, who is the national assessing authority and will be responsible for administering the economic substance test for all entities in the UAE and for imposing penalties under the new economic substance regulations. It also clarifies the role of regulatory authorities like the DIFC in relation to the economic substance regulations and the role of the Ministry of Finance as the competent authority. We'll give you a quick snapshot of each of our roles in a subsequent slide. It also clarifies how the economic substance regulations will be administered and how information will flow from licensees to regulatory authorities through to the Federal Tax Authority and then ultimately to MOF and then other jurisdictions if there is a breach of the economic substance regulations. So branches. There's been an important change to branches who are now exempt if they meet these requirements. So if you are a UAE branch of a UAE business, you do need to file a notification and a report if you conduct a relevant activity. However, only a single notification needs to be filed, and this single notification has to be filed in the main jurisdiction. So, for example, if we have a DED licensed registered entity, an entity registered in the DED that has a branch in DIFC, it has a branch in DMCC, it has a branch in Media City as well, for example. So it's incorporated in DED. It's a DED incorporated and registered firm. It has branches in DIFC, in DMCC, and Media City. Only that DED incorporated and registered firm will file a single notification in that main jurisdiction. The branches do not need to file separate notifications. The notification filed by the main entity is for itself and all the branches in the UAE. But this is where it's a UAE business, okay? And as I said, they will be reporting all the relevant activities of the branches in a single notification, and the same will apply to reports as well. Now, if you are a UAE branch of a foreign business, so now we're talking about say a company registered in the UK, it has a branch in the DIFC. Can have a branch anywhere in the UAE, but let's say for this purpose, it has a branch in the DIFC. They are not subject to the economic substance regulations if they pay corporate tax outside the UAE. And normally, if you are a DIFC branch of a UK entity, then that UK entity would pay corporate tax on the branch's activities. So if that is the case, then you are not subject to the economic substance regulations. However, if you are a UAE branch of a foreign business that is not subject to corporate tax, maybe it is another jurisdiction in the GCC that doesn't have corporate tax, then you would still be subject to the economic substance regulations in the UAE and will be required to file a notification and a report. And please refer to the regulations and the guidance for more information on this. Finally, if you are a foreign branch of a UAE business, you are not required to report on the activities of the foreign branch if it is subject to corporate tax outside the UAE. So this is the case where, say you are a DIFC entity incorporated in the DIFC and you have branches outside the DIFC. You have a branch in Singapore, maybe you have a branch in the US or UK. You do not need to file any information in relation to your foreign branches that are subject to corporate tax outside the UAE. Now, if they're not subject to corporate tax outside the UAE, you will need to report on them, okay, in your single filing. Okay, now we're going to talk about some of the changes to the relevant activities. There have been slight modification to the distribution and service center business activity. You will recall previously that this involves two distinct activities. One is the distribution business and the other is the service center business. let's deal with the distribution business first. So under the new regulations, to be considered a distribution business, you need to meet all of the following requirements. You need to purchase raw material or finished products from a foreign connected person, that's another member of your group outside the UAE, and resell or distribute those raw materials or products in the UAE or outside the UAE. Okay, so let's recap. You need to purchase raw materials or finished products from a group company outside the UAE and then resell or distribute it in the UAE or outside the UAE. Okay, now where you purchase or distribute goods to third parties only, there is an exemption and you are not considered to be engaging in distribution and service center business. Previously, the goods had to be imported or stored in the UAE. That limitation is no longer applicable. So they don't need to be imported or stored in the UAE. They just have to purchase the raw material from a foreign connected person and resell it anywhere or distribute it in the UAE or outside the UAE. But if you're only purchasing or distributing goods to third parties only and no one else, then you're not engaged. Please refer to the relevant activities guide that has been updated now to cover this new definition of distribution business, and it gives you examples and will clarify whether you fall within it or not. Now we'll talk about the service center business. As you know from previous presentations, this has a broad scope. It applies to consulting firms, administrative firms, and other services, okay? This applies where services are being provided to a foreign connected person, so another member of a group in another jurisdiction outside the UAE. And there was a previous requirement for connection with a business outside the UAE. However, this has been removed, and there's no requirement for your services to be connected with the business that is outside the UAE. Okay. There are some things, some qualifications for you to consider. Licensees that are engaged in service center business, would apply if they're providing consulting, administrative, or other services to a foreign group company in the ordinary course of business. Okay, that's very important because if it's a one-off transaction, then you are not subject to this definition. So, for example, if you are in a group structure, you are a branch of a law firm and you work with your UK office on a transaction and your normal activity is providing legal services, then you would be caught. However, if you're a law firm and you decide that you are going to one of your other branches, say in Saudi or in Kuwait, required IT support or some other support that's not your normal ordinary business, and for one-off you're going to second an employee there or give some staff there, that would be excluded. It's not in your ordinary course and it's a one-off kind of arrangement. Now, there are examples of all of this in the relevant activities guide. Please review it, please look through it, and it will clarify whether you fall under the service center business or not. Now, there has also been a change to the high-risk IP business. As you will recall, if you're a high-risk intellectual property business, then you have increased substance requirements, and the default is that you're deemed to have failed the economic substance test unless you can prove otherwise. Okay. For the intellectual property business, the definition has been limited and amended. So in order to fall within this, you have to meet all the following conditions to be considered a high-risk IP business. The licensee must not have created the IP asset which it holds for its business. It must have acquired the IP asset from a connected person, so that's someone within the same group, or have purchased the IP asset in return for funding research and development done by someone outside the UAE. Okay, so that can be someone that's connected either within your own group or by an individual somewhere outside the UAE, or totally unconnected to you. So where either of those apply, you did not create the IP yourself, you acquired the IP from another member of your group, whether they're in the UAE or outside the UAE, or you have purchased the asset in return for someone else doing the R&D outside the UAE, and you license or sell that IP asset to a connected person, so someone in your group in the UAE or outside, and you earn separately identifiable income from someone else in your group that's outside the UAE in relation to the use or exploitation of the IP asset. I know that's a complicated definition. We will try and break it down for you, and if you have any questions, we will answer them. But please look at the guidance and the updated relevant activities guide. It does provide examples of who is in scope and who is outside of scope, and will help you in determining whether your business falls within that definition of high-risk IP business. It's very important to determine whether you do or don't, because if you fall within this definition, you are deemed to have failed the economic substance test unless you can provide evidence to substantiate that you have real substance in the UAE. Okay, the new economic substance regulations also clarify a number of terms. So we talked about the licensee definition before. The new definition specifies that you must be a judicial person or a juridical person, which is just a legal entity incorporated in the UAE or elsewhere, or an unincorporated partnership. But as we've already told you, all the DIFC entities will fall within this definition. So for DIFC entities, that change does not affect you. Okay, the definition of gross income and relevant income have changed. So relevant income is there. It's all gross income from a relevant activity that's recorded in your books and records under applicable accounting standards. The gross income definition has changed, and it's defined in the guidance to mean all income from whatever source derived from whatever, whether it's from sales or inventory or properties or services, without deducting any costs or expenditure. Okay, gross income does not mean taxable or accounting income or profit. Okay, please look at that definition, because it's only if you earn relevant income that you need to file a report. So if you conduct a relevant activity, you need to file a notification, even if you're exempt, but you only need to file a report if you conduct a relevant activity, you earn relevant income, and you are not exempt under the new regulations. Okay. Now, the definition of connected person is an entity that is part of the same group as the licensee or exempted licensee, and the definition of group has been clarified as well to mean two or more entities related through ownership or control that are required to prepare consolidated financial statements, okay, under applicable accounting standards. You can refer to the legislation and the guidance for more information on those terms. Okay, that's the end of my section. So we can take relevant questions there. Obviously, you can ask more questions at the end under the Q&A session as well, but I'm happy to take questions.
Thank you so much, Tanuja. So I've classified the question into various categories. So the first question mainly relates to that who should file. So could you please help us clarify, if we are conducting a relevant activity, are they supposed to file notification? I think the answer would be yes.
You're absolutely right, Khushbu. If you conduct a relevant activity, then you have to file a notification. on the MOF portal, but only if you conduct a relevant activity. We again ask you to just double check because there have been changes to the economic substance regulations. So please review the new regulations and the new guidance. You'll find more information on our website, on the economic substance page, on the MOF portal. We will provide this presentation as well. And if you're still confused, please go and get external advice on whether you fall within one of those relevant activities. If you conduct one or more of those relevant activities, then you must file a notification on the MOF portal.
Okay, if you're conducting a relevant activity but you're not earning income, you still have to file the notification, right?
Exactly. Thank
Okay.
you. Kashmir, you've been paying very good attention to this presentation. Yes, if you if you conduct a relevant activity, regardless of whether you earn income from that activity and regardless of whether you're exempt or not, you still need to file a notification. It's only a report that you don't need to file if you don't earn relevant income.
Thank you. So I think that clarifies a lot of questions because we could see a lot of questions coming in relation to that. If we are not earning any income, but we are conducting a relevant activity, should we file a notification or a report? So entities that are not conducting any relevant activity will not file any notification and report as well. Perfect. The next question comes in on who should file a report. Do you want to throw some light on that?
Sure. So we've already clarified that if you conduct a relevant activity, regardless of who you are, you need to file a notification. Okay. Now we're looking at who needs to file a report. So the people that need to file a report are those that earn relevant income and conduct a relevant activity. But if you are exempt, you don't need to file a report. Okay. So let's recap. If you're an exempted licensee, you don't file a report. If you don't earn relevant income from the relevant activity that you conduct, then you do not file a report either.
That's perfect. I think I've understood it very well. Okay, the next question relates to branches. So for a branch of a foreign company, are they required to file a notification?
They are not required to file a notification if they're subject to corporate income tax outside the UAE. If they are not subject to corporate income tax outside the UAE on the income earned from the branch, then they will still need to file a notification and a report. Oh, sorry, they need to file a notification regardless, but they would need to file a report and they won't be exempt.
Okay, the next question mainly relates to clarification of roles of what the role FTA would play, regulatory authorities will play, which I think Laurie will cover as part of her presentation. So we'll move to the next question. The next set of questions are mainly relating to the requirements part. So the first question relates to that, considering the current situation, board meetings have not been held in UAE, which is a requirement as per the regulations ESR. So, and for 2019, because the regs were not very clear, people were not aware, in a sense, there was less awareness as part of that. What should we do in such instances because they've not been able to help board meetings in UAE itself?
Okay, that's a really good question and a very practical question. What we can tell you is that MOF has issued on their website an announcement in relation to COVID-19 where they said that they would take that into consideration in terms of holding board meetings for the 2020 financial year. In relation to 2019, there has not been any specific guidance issued. We cannot speak for the FTA, but if you think of it practically, we are hoping that they will take that into consideration, that things were not so clear in 2019 with guidance issued later on in the year, not until September and things like that. However, from 2020, barring COVID and those implications, there has been a lot of communication on economic substance. There's been a lot of outreach by us. MOF has done a lot of communications. Other jurisdictions have done a lot of communications. So we know that you are all very well aware of economic substance and you understand what you need to do in terms of demonstrating substance. Please look at the MOF guidance on COVID-19 and the fact that they are taking that into consideration in assessing substance for this year. Please bear that in mind. But given that you know what the requirements are. Try and meet them if you can, because we really can't speak for what the FTA will do. Laurie will go into that in a bit more detail about the roles and responsibilities of the different regulatory authorities. We are not responsible for assessing whether you have substance in the UAE. All our responsibility is to verify the information that you're submitting and make sure and verify whether you are an exempted licensee. So we will need to check whatever supporting documents you are submitting, if you're claiming that you're an exempted licensee, and determine whether you should fall within those definitions or not.
Perfect. So our next question actually relates to the guidance. So as per the guidance, it's mentioned that they have to upload the proof of tax payments. So can a financial statement be considered as a proof of evidence for tax payments too?
We would have to go based on what the guidance is, and there is now specific guidance that has been issued on each of the templates. So the notification template and the report template, you can find these on the MOF portal, and we have links to them here in this presentation and also on our website. So we are required to verify the information you submit. We can only accept the information that the guidance and the portal says can be accepted. I haven't checked to see this specific question, but we'd need to look at the guidance. What they've suggested is, corporate income tax certificates, actual invoices, invoices showing evidence of tax being paid. So if it doesn't fit within one of those categories, then it wouldn't be considered.
Okay, we've received a couple of questions relating to representative offices. So that would they be considered as a branch of a foreign entity that pays corporate tax elsewhere? So due to which would they be classified as exempted? The rep offices?
It will depend on their legal status, but we can take these questions offline because they are a little bit more complicated. And we will also need to, because rep offices are specifically related to financial institutions, we may also need to consult with DFSA on how we consider and answer those questions. So we can take those away.
Okay, perfect. So I'll just take down the people who've asked these questions and we can talk to them separately. The next set of questions relates to exemptions. So what if branches do not pay taxes outside of UAE due to tax treaties? Are they still exempt?
I would suggest that you pay close attention to the guidance and the legislation, the economic substance regulations themselves, and see, because they clearly state that you need to be subject to corporate tax outside the UAE. I don't recall whether they talk about tax treaties or not in their consideration, but this will again rely on the guidance and the supporting guidance to those templates for notifications as well. If you have specific questions though in relation to this, we can liaise with MOF on that, because it will be a consistent answer for all jurisdictions in the UAE as to how they deal with these entities that are not subject to corporate tax due to double taxation treaties.
Okay. The next question is, under the exempted licensees, would corporate entities such as DIFC entity be considered as UAE residents?
Sorry, Kushba, can you repeat that one again?
Sure. Under the exempted licensees, would corporate entities such as a DIFC entity be considered as UAE residents? So if an entity is here based in DIFC, can we classify them as UAE residents so they get an exemption under that?
So it's only if they are wholly owned by UAE residents. So you need to look back at the shareholders and the UBOs. If they're all UAE nationals or UAE residents and the operations are only in the UAE and it's a UAE business, then you fall under that exemption. But if you have owners that are not UAE residents, then you wouldn't fall under that exemption.
Okay. Now the next set of questions relates to relevant activity. So the first question is, if the materials did not enter into the UAE, it directly came from a third country to another third country, should we count this as distribution business?
Sounds like a very technical question. I'd suggest you consult the relevant activities guide in particular and look at the definition of the economic substance regulations for distribution business to see whether that falls into it for your business.
We can see that we received a few questions where I think suggestions or advices are being advised by DIFC if they fall within the relevant activity definition. Tanuja, I don't think we can guide them on such queries, right?
Yes. As a DIFC authority or on behalf of the Register of Companies, we cannot provide any advice or guidance on whether an entity falls within the definition of a relevant activity. That is for the entity to determine based on the regulations and the guidance issued by MOF and the relevant activities guide. If you are still unsure about whether you fall within the definition of relevant activity, please do go and get independent advice.
Great. So I think that answers a lot of questions relating to relevant activities that we technically cannot provide any guidance on it. I can see we've received some more questions, but what I'll do, I'll just consolidate that until Laurie can go ahead and do her presentation, and then we can take those questions at the end. Thank you. Thank you, Tanuja. Laurie, go ahead.
Okay, thanks so much, Tanuja and Khushbu. Right, so that's a lot of information so far, everyone. Hopefully you're hanging in there with us, and thank you so much for your questions. What I'm going to speak about now is just to sort of recap, and again, to give you some information around dates and filing times and the sort of flow of things. So we can move on to the next slide, please. Right. Okay. So this gives you a good visual of how the ESR administration and information will flow through this process. Just a very high level view, right? So licensees are you, the clients, the entities, the businesses here in the UAE or otherwise, dealing with whether or not you have to file notifications and reports, right? Submit timely and accurate notifications and reports where required, and respond to information requests from the regulatory authority, which is us, and the FTA, okay, which is the National Assessing Authority. So if you look then at the next column, we have the regulatory authorities. That would be the ROC's office, collect notifications and reports, review and assess and validate information, identify cases of non-compliance, and clear ESR reports for assessment by the FTA, right? So basically, as we say, we can't necessarily give you advice on whether or not you're a relevant activity. Tanuja rightly says you have to determine that for yourself. We do have to verify certain pieces of information that you provide us, or provide through the portal, I should say, the MOF Portal, which we'll get into again in a little bit more detail, and identify cases of non-compliance. So there is an element of weighing in that we will do at some point, but in terms of making the initial assessment and the supporting documentation that you need to file in order to substantiate your assessment, that's for you to do and decide. The Federal Tax Authority will then make its own assessments with respect to meeting the economic substance test, imposing administrative penalties, talking through appeals with companies that have been fined that don't agree with it, and providing more information to the Ministry of Finance. The competent authority then is the Ministry of Finance itself, in the sense that it issues decisions around the implementation of ESR, exchanging information with foreign competent authorities, and dealing with the consequences of a licensee not meeting the economic substance test with respect to how it plays out in the jurisdiction where it may or should be dealing with economic substance notifications and reporting and tax payment and so on. So there will be exchange of information as well. And that's done at the competent authority level. Go ahead. Okay, so let's recap a little bit. Now, as we say actually on our website as well, you can find all this information there. What do you need to do? Okay, so regardless, right, notifications need to be filed on the MOF economic substance portal within 6 months of the financial year end, and reports must be filed on the MOF portal within 12 months of the financial year end. Okay, so that's the general rule. With respect to what we're dealing with now, the reason we have this portal that's going to be available to you, or at least the economic substance regulation portion of it will be available to you the first week of December of this year, is to deal with the notifications and reports that have already been submitted and or need to be submitted from the previous year, okay? So again, just to recap, the first 2 bullet points are the general rule. That's what you're going to be following basically from here on going forward in terms of the next reportable periods. For what's already been dealt with, they have requested that you resubmit your notification. Okay, so all DIFC entities that conducted a relevant activity, including exempted entities, are expected to register and resubmit their notification. Even though you already have submitted one this year to us, you'll be submitting it directly to the MOF portal. DIFC entities that conduct a relevant activity with a financial year ending by 30th of June 2020 will need to file a notification by 31st 2020 for the 31st December 2020, and DIFC entities that conducted a relevant activity and earned income during the reportable period ending on the on or before 31st of December 2019 are also required to file a report by 31st December 2020. Okay, unless it's an exempted licensee. So again, that's a lot to handle. Just follow the bullet points. Essentially, it is that straightforward in the end, but you do have to make a few determinations. You do have to consider what you've already filed in your notification and update it if needed, or make a notification if you didn't somehow manage to make one before. Just make your notification even if you're exempt, right? So DIFC branches with a UAE parent and head office should not file. The UAE parent head office must file notifications and reports for itself in all branches. So this is consistent with what we've said already. Again, it's consistent with what's on our website. So if you're looking for where to go to review this, you can check out a few of the FAQs on our website. You can check out these slides when you receive them. But it is effectively, yes, again, the first 2 bullet points are what the general rule is now, but this whole filing by 31st December 2020 issue for notifications and reports where relevant is to deal with what's already been submitted and or should be submitted for the prior year, okay? Go ahead. Okay, so this is a timeline for you, and you've seen this probably before if you've joined our webinars around economic substance. But if you're talking about, for example, a company with a straightforward calendar year, financial year, so 1st January to 31st December financial year. Okay, so we're looking at the reportable period there being that exact calendar year, that financial year, right? 1st January 2019 to December 31st, 2019. That's your reportable period. You must demonstrate substance in the UAE for that period. So your notification would have been filed with the DIFC by 30th June. And what has been requested from the MOF is that you then resubmit your notification directly to the MOF portal, not via our portal, but the MOF portal, and submit your return on the MOF portal as well. Okay, that's your report or return. All right. Then if you take a look at an existing company with a financial year of 1st April to 31st March, those first few months of 2019 and the prior year don't qualify as part of your reportable period, right? So you're not required to demonstrate substance. What you do need to demonstrate substance for is that financial year that started in April of 2019 to 31st March 2020. Again, you would have filed your notification with us through our portal on the 30th of June 2020. Technically, because of your financial year and the way it falls, your technical deadline would have been 30th of September 2020, but set that aside for the moment. What you need to focus on here is, in any case, again, because I said this is talking about sort of retroactively capturing the economic substance information for the prior financial years is to resubmit your notification on the MOF portal by 31st December 2020 and to submit your report as well by March 31st, 2021. Okay, so we can move on from there. So filing of a notification report, the last date to submit is December 31st, 2020 for relevant reportable periods. Again, this all turns then on your relevant reportable period. So you have to make that determination as well. We're looking at you talking through what your relevant activities are and if you conduct any, whether there's any exemption, and what your relevant reportable period is. It's those three key things that you need to consider, okay? So go to the MOF portal and create your account. There is a link for it already, and as I understand it, Khushbu, the portal itself is ready. It's the economic substance portion of it that is not yet live. That's what's coming live the first week of December. So you still can go to that link and actually get set up on the MOF portal so that you don't have any issues or waste any time when you do need to make your submissions, okay, when the ERS portion comes up. Submit your ESR notification, right? If you're, well, let's not even go there. Submit your notification through the MOF portal and submit then your report if applicable, right? Okay, so the templates for the notification and report are available at the links that you see here as well. You can hyperlink to what those will look like. But again, you're going to be completing them on the MOF portal itself. But this will help you start getting prepared for what you will need to submit in 6 weeks' time at the latest. Okay, if we can go ahead. Right, and then this is just a snapshot of what the dashboard in the MOF portal will look like. So basic login page, you create your account on the MOF portal. You have then your licensee dashboard main page, and as you complete it, you will have further information that shows up to help you manage your notifications and your reports, okay? And then the part that nobody loves to talk about, but we have to, consequences of non-compliance. There will, of course, be consequences for non-compliance. It's rather unfortunate. We're trying to make it as clear and easy for you to avoid that as possible by holding these outreach sessions for you. If you need to spread the word, feel free to share our website. We'll be communicating. We want to get, it is a fairly tight time frame. So we want to make sure that everybody gets the message and is doing what they need to do in order to comply. Okay, so the penalties for failing to resubmit your notification via the MOF portal by December 31st, and note there it says and supporting documents. So you need to have it all together and support and file. There is a penalty of 20,000 dirhams if you fail to do that. There's a penalty of 50,000 dirhams if you fail to submit your economic substance report and supporting documents by 31st December 2020. If you fail to demonstrate sufficient economic substance in the UAE for each relevant financial year, there's a penalty of 50,000 dirhams. And then if you do it 2 years consecutively in a row, fail to do so, the penalty is 400,000 dirhams and your commercial license could be suspended, withdrawn, or not renewed. And finally, if you fail to provide accurate information, actually that should say, if you fail to provide accurate information, there's a penalty of 50,000 dirhams, right? So when you provide inaccurate information, you will be fined as well. Where an entity has not met the economic substance test for a financial year, or where an entity derives income from the IP assets considered as high risk as part of the IP business relevant activity, the MOF shall also provide the relevant information about such entity to the foreign competent authority of the country of territory in which the parent or ultimate parent company and the UBO of the entity resides. So you can find that in Article 11 of the ESR as well. So there will be exchange of information. There will be penalties. We hope you can avoid all those things by tuning into these webinars and also checking out our economic substance website, on the DIFC website. We have plenty of information for you. You can link then also to the MOF websites as well and read through the regulations and the guidance there. So thank you for joining. I think we'll probably end up with a few more questions as well. If we do, Khushbu, you can read them out to us. Thank you.
Perfect. Thank you so much, Laurie. I think we're getting a lot of questions relating for us to confirm if they fall within the exempted criteria or if they're performing any relevant activity. I mean, I'm just going to consolidate the response that Tanuja had given previously as well. We cannot confirm such things. You will have to go back to the regs and verify it and obtain external guidance if required to confirm that for yourself. Unfortunately, the DIFC will not be able to provide any such confirmations like that. We can for surely provide guidance. And I think, Tanuja, we have a lot of questions relating to service business and IP. So clients have been asking us that whether CSPs can be classified as service business. And I mean, questions are coming around. Can you give us some sort of examples of high risk IP? So do you want to just like give them a brief again about these two categories, maybe a short one?
Sure. Look, there's a lot of information in the relevant activities guide on both the service center business and the high risk IP business. Please go and look at that. And if this is an area that we're getting a lot of questions, then maybe we can have a separate session, because I'm mindful that we're just about to run out of time. We can maybe have a separate shorter outreach just on that. We anyway contact with CSPs on a regular, we connect with them on a regular basis. So we can do that through that channel. And we have subsequent sessions on this. We can look into that in a little bit more detail and potentially do a separate little focus group just on high risk IP if that's relevant for clients.
I think that would be really helpful. There's one question relating to if entities are currently under liquidation, are they supposed to file?
Yes, so you will see previously also on the notification template that you had with us, and it's there also in the new notification template. All entities need to file if they have a reportable period that's relevant, even if they're pending dissolution or under the deregistration process. It's only entities that have already dissolved or liquidated or deregistered that don't need to file at the time that their notification is due. But if you're still in that process, you will need to file a notification. Obviously, if you didn't earn relevant income during the reportable period because you were under liquidation or deregistration, then you don't need to file the report, but you would still need to file a return.
Okay. Tanuja, we're getting a few more questions relating to the reportable period. So entities that have newly established back in June or July to 2020, are they supposed to file their notifications? Or entities that have incorporated in Jan 2020 or by December 2019, are they supposed to file notifications or reports? Laurie, do you want to answer that question?
So for the updated reports and notifications, no, if you don't fall into those reportable periods that we showed you on the previous slides, if you could go back about 3 slides, please, Maristella, let's bring that back up. Might be easier that way. Keep going back. We'll get there in a sec. Okay, first example, if we could, one more, please. Yeah, perfect. Okay. So if you look, for example, on this reportable period example, an existing company with 1st January to 31st December financial year, right? So we're talking about that specific 2019 period of 1 calendar year, which is your financial year. That's the reportable period. So if you were existing in that time and that's your financial year, then that would be the reportable period that you have to worry about, okay? If we go to the next example then, please, as well. Right, so again, we're talking about companies that were existing and have a reportable, a financial year of 1st April to 31st March of 2020. Again, that would be the reportable period that we're talking about for the resubmissions, okay? this isn't about going forward necessarily. The resubmissions that we're talking about are the ones that were already reported to us June 30th of 2020. So if you came into existence as a company after that reportable period date, so let's say the longest date would be March 31st, 2020, you're not resubmitting anything. Now you're dealing with actually the first two bullet points on the other page that we had up previously as well, that talks about just the general rule going forward. So 6 months from the end of your financial year to file a notification, and 12 months from the end of your financial year to file your report. Okay, so only talking about resubmissions when we're talking about those prior reportable periods. You still will have to consider, if you're a new company, what your reportable period actually is, and it's based on your financial year. Okay, hopefully that helps to clarify.
Yeah, that was really helpful. I think we've received some questions relating to, will there be any grace period after 31st December? No, there'll be no grace period. And if there will be any, a notification will be sent across by MOF and will be available. But as of now, there'll be no grace period. So we require everyone to comply by that period of time. We've got questions relating to where they mentioned that foundations are not considered as licensees, and that has been mentioned as part of the MOF FAQs. Is that correct?
Yes, that's a really good question. We have looked at it as well, and we have been asked this question based on the definition of licensee. Because DIFC foundations are a separate legal entity, we would say that they fall within that definition of licensee. The MOF foundations may have referred to some sort of unincorporated association or body. They wouldn't be subject to it, but for the DIFC foundations are incorporated as a separate legal entity, and they would fit within that first definition of licensee, being a jurisdictional person, and it is a legal entity. So to be safe, please file if you conduct a relevant activity.
What about single family offices?
They are also a legal entity. So like I said, all DIFC entities, if you're a single family office, you will had to be either a company, which is in most of them, or potentially a partnership. You're a legal entity. If you conduct a relevant activity, you need to file.
We've got questions relating to if they're conducting more than one relevant activity, do they have to file multiple notifications? No, you just have to file one single notification. So against each entity, you have to file one notification and one report. Please do not file two notifications and multiple reports. It's single entity, single notification. So it's based on per entity level. Do you need to notify DIFC when you're filing there? No, you do not need to notify, because we will have access to the system and we can verify, and we'll return the request in case we require more clarification. So you do not need to let us know as such when you're filing. There's one question relating to where people want to know the difference between a branch and a subsidiary.
That is a legal question. So you will know if you're a branch and you will know if you're a subsidiary. So a branch is not a separate legal entity. You're considered a foreign recognized company. You can see that on our public register and in your records. You will either be a foreign recognized company or a foreign recognized partnership. That is technically a branch. A subsidiary is an entirely different legal entity and would not fall within the definition of a branch, and will need to file a separate return and notification.
Okay. Do exempt entities have to file notifications every year?
At this stage, yes. Every year you will need to file that notification and exemption. If anything changes, we will let you know.
Okay, and we can see a lot more questions coming around the MOF portal, whether you will have multiple access and details around that. There'll be a user guidance that will be issued by MOF and will be available on the MOF website. We're not sure by when, but for surely it should be before the first week of December. Once we receive it as well, we'll share it with all our clients. Considering the current time, I think we've already exceeded 11. So we have some more questions. What we'll do is that we'll take those questions, whichever are valid and whichever have not been answered previously, we'll add that at the end of our presentation so that you can refer there. Yeah. So thank you, everyone. Thank you, Tanuja. Thank you, Laurie. Thank you, Maristella. Thank you so much. And thank you, everyone, for joining in for that session. It was really useful, I hope, for you. And thank you for joining in. Have a great day ahead.